EV news. NIO. NIO is back, and they have disappointed, but one thing I really liked about NIO, their charging network is growing. That is a very, very important thing for me, and if you've listened to me any length of time on these EV companies, I've said charging network is extremely important, and they've done that. So let's look here. NIO delivered 10,052 vehicles in July of 2022, increasing 26.7% year over year. NIO delivered 60,878 vehicles in 2022, increasing 22% year over year. NIO is one of the larger Chinese EV companies. There's rumors that they're going to be coming to the United States. Now, here's the thing that really, something that I pay attention to. On July 6th, NIO's 1,000th power swap station was put in Tibet, China. Now, these stations are they're very important. If you look at companies like Porsche, if you look at companies like Audi, Ford, etc., they don't have reliable charging stations. That's why when I look at companies like Rivian and Nikola and Lucid, I look and say, yes, the cars are awesome. There is no doubt about it. But outside of charging at home, where are you going to charge? That's the great thing about Tesla. They've got 36,500 around the US, around the world, whatever it is. It's a very, very large number. I have traveled from Cleveland to Chicago, pulled off on the turnpike. There's charging stations at multiple. I don't even have to get off of the turnpike. I literally stop where everybody else does. I've traveled to St. Louis, same situation. You run right down the highway, you stop at a Starbucks or whatever. There is a charging station there. That is where these EV companies need to get. But I really like what NIO's doing. They put their 1,000th in. They have deployed 1,047 swap stations in China, and they plan on having 10 million in total. And here's their network right here. So that is pretty incredible. Now, these are the unaudited numbers that just came out. So they're going to report later this month. Actually, the day that they're going to report is September 27th. So on September 27th, they're going to actually have their real report. This is the unaudited report out of Li Auto. Results today, $1.3 billion disappointment. There was a decrease of 8.75% from its Q1 2022 earnings. Revenue jumped 73.3% from the year earlier. So that's positive. But again, it's not the most positive thing. We're going to have to see. I'm more interested in seeing when their true audited numbers come out. But let's look at this company. Before I do that, my name is Mo. I'm a value investor. So when I look at a company like NIO, I can't just go and say, hey, this is an innovative company and they're going to the moon. I'm sorry. They have, how many cars did I say that they have on the road right now? They have a total of, let's see here, cumulative deliveries are 227,949 cars. That's not enough cars for me to say this is a viable company. They're going to be around for the long haul. I talk about this company all the time, Fisker Karma. A lot of you might not know this. Google the Fisker Karma, 2012 Fisker Karma. This was an awesome car. It was an innovative car. It had a solar panel on the roof. It was not a total EV, but it was an awesome, awesome car. And this was supposed to be the next big thing. They had a great website. They did have actually great cars, but the company didn't stick around, and now it's in a totally different format of Fisker. This is where I can't just say, okay, now that they've delivered 228,000 cars, I am going to go all in on this company. I need to see a lot more. I need to see more financial data. I need to see more direction of where they're going. Just looking right here at our 8 pillars, there's not a lot on there, mostly because they don't have 5 years of data. So let's come down here. And one thing I want to focus on is their shares outstanding. You as a shareholder have been completely diluted. From 2019, they had 1.03 billion shares outstanding, and now they have 1.62 billion shares outstanding. So your piece of the pie, for whatever you got, maybe you got this little sliver right here. Well, now that thing looks even smaller. That's exactly what your sliver looks like compared to your old one, because they have diluted you as a shareholder. Let's go to Stock Analyzer tool. In Stock Analyzer, I don't have a lot of data to go off of, but this is a car company. So I am going to base this off of different car companies, especially as far as profit margin go. This company has a ton of revenue growth promise going forward. But how much is it? Is it 60.5% over the next decade? Is it 30.5%? Is it 10%? Is it 100%? I don't know. That's why when I put this number in, I'm going to put in a wide range, and I'm going to see if best case scenario, worst case scenario, what would I pay for this company today? Revenue growth. I'm going to put in 15, 30, and 45. It has to be a wide range because this company does have a lot of potential going forward. They're small enough to have that potential. Profit margin. Let's put in 4, 8, and 12. that is an unrealistic number. You know what? Let's not even do that. Let's do 3.5, 5.5, and 7.5. That's a lot more realistic. Remember, they're in the car industry. And I know a lot of people out there are going to say, no, they're not. They're in the tech industry. They're innovative. Okay, that's fine. Are they innovative? Absolutely. Is my Tesla Model S that's sitting outside innovative? Absolutely it is. But would I pay $1,000 a share for the company? No. 18, 20, and 22. And I'll play with that. And now that, because this is a young company, I cannot put in a 12.5% return here. Typically, you'll see me put in 12.5, 13.5, up to 15%, because the average market return is 9.9% over 100 years. I can invest in the S&P 500 and I'm going to get this. If I'm going to do all the work and I'm going to take all the risks to invest in a company like this, I need to have a little more margin of safety, and I have to make the juice worth the squeeze. So for me, I'm going to put in a 20% return that I want to get on this thing over the next decade. Let's see what this thing spits out. And I can also play with that PE ratio. Okay, the current price is sitting at basically $20 a share. It's somewhere in the range of $2 to $45. That's a big range. So do I start looking at this thing around 10 bucks? It's very possible. This is one of those EV companies for me that I say, yeah, this is one that I'm actually interested in looking at. Rivian, I'm not interested in looking at Rivian right now, because when I put in all of these numbers into Stock Analyzer tool with Rivian, I get like 30 cents to 70 cents because it is just so freaking unknown. This at least has a little bit of a track record. When I look at Lucid, it's the same situation. This is a very interesting company to me. Maybe I start going and selling puts on it. Now, the only other issue I have with this is that it is a Chinese company, and I do worry about the numbers that come out of China. We saw the unaudited numbers. There's conflicts right now between the United States and China. The United States, to remain on the New York Stock Exchange, they want the Chinese companies to be audited by US companies. Is that going to happen? I don't know. I think this will all be determined by 2024. And if it doesn't happen, all these Chinese companies are going to get delisted. But with all of that being said, we are giving away a Tesla, the competition to this company. We are giving away a Tesla. Click this video right here. You get explained all the rules. Catch you on the flippity flop.